Good morning, gang. Good morning. Welcome to this week's Bitcoin update. As usual, remember, nothing discussed is financial advice. This is for educational purposes only, and this is just my view on the market. Right, jumping back in. Let's have a look at the monthly straight away. Well, the monthly, we've not closed yet. We've still got one day and 15 hours left to go. Right now, we're on a knife's edge. Does this, is this a death sentence? Does this mean that we're going to start breaking down? No. We're still going sideways, and we've been going sideways now for months. If we do get a close down here, yeah, it does lead to continuation of bearish. But, let's wait and see. We're still in a range, and we trade the range until it breaks. This could still break up from here, but let's wait and see. Zooming into the weekly. Again, downtrend. We did last week. We were talking about this. We did end up closing on new lows on the weekly. Again, I'm not saying this is a death sentence in itself, but it's something to keep an eye on. And obviously, we've still got another 3.5 days left on the current week. And then daily, obviously, still in a downtrend, but we're talking about it up here. What we want to see was lower lows and lower highs, and that's what we've got. Right now, we're potentially a bit too early to say, but we've potentially got a new low, a high, potentially a higher low even, and then maybe looking for a higher high. But again, this just could be a complex low and just part of the same continuation down. We're not reading into this too much because we're still going sideways. Obviously, we've been banging on about this now for months. We're still in this channel. It's still catching people off guard for some reason. I don't understand why, because it's such an obvious thing to put on your chart. Especially when you've got your ultimate respect at the highs, you've got your respect at your lows, you got your respect at your EQ, and it's just playing out nicely. We were talking about this last week about how we're rejected up here, which then caused the drive down. On last week's video, if I remember rightly, it was roughly around the 23rd. We were talking about if price could spike up from where it was around here, then we'll be looking at the golden pocket on the outside of the channel once again. But we continued going sideways for a little bit longer, and we ended up spiking up and just coming shy of the 0.5 and rejecting perfectly off this channel again. Now, once again, price got to the highs, everyone got bullish. We started to see a lot of bearish CVD divergence up at the top, which was a bit of a early indication to say that this was going to pull straight back down again. And lo and behold, we nuked back down again. And anyone that longed up here chasing these candles because of FOMO kicking in and because your favourite influencer was telling you that we're going up again, we're going to the top of the range, or we're going to new all-time highs, all of a sudden you got destroyed again and we came back down. It was a fairly easy shot to take, was this one. Now we're coming back down, and now we're coming up, and now we're hovering again. So let's zoom out and let's have a look at what's going on right now, and let's see if we can make some plans. So first and foremost, range. Highs of the range, lows of the range, EQ. Okay, now let's give us a bit more detail. Let's throw on the fixed range volume profile. And now we can see we've still got the point of control here, which last night we rejected off. Now it's last night for my time. We rejected off, slightly front run it, but clear as day. And if you manage to catch that short, great short. Take profit back into this mini range that we're creating. If we do break down, obviously you can let that ride. If we do manage to flip this point of control, then ultimately we're looking at this local, very local range that we've formed here. So if we can flip back above this mini range EQ, get back above this macro point of control, then initially we'll be looking at these highs here. If this happens and we break out with this channel and everyone gets bullish and we manage to get past this area, then we'll be looking up at this EQ, and in fact we'll be looking at this as more of a zone, because we've got the value area high here, we've got the EQ here, this whole zone here. If you see a bit of a failed rally in this, where price starts changing structure, if we zoom in, if we get into this box here and we see price hovering up, and then we start to break structure here, then you'll be looking at that and you've got a nice entry there. But obviously, if that doesn't happen and it carries on pumping higher, then if you are in a long, let it ride a little bit longer. Above this, you've got this whole area here, which is obviously relating to this price action. This is to be considered resistance. There's quite a lot of it. I know it's not the value area like this is, but it's still a lot of resistance. And get above that, if you can flip all this and get out here, then once again you're looking at coming into this range here. If it doesn't get a rejection, then you trade in that range. If it does get a rejection, then coming back down, targeting this, because obviously this is a very thin move here. So if it does get into this territory and you get your FOMO breakout traders going a little bit excited here, then I'd expect this to move through very fast. Obviously that's on the upside. What happens on the more bearish case? Well, if price does roll over here, then value area low. Ultimately, this local range low here. If that holds, then we're still trading this range. If that doesn't hold, then like we've been saying for a while now, we'll be looking at the overall range low, which obviously coincides with the June lows. Ideally, again, like we've been saying for a while, I'd like to see a swing failure of this, a reclaim, which would then take out the stop losses that are down here for anyone that managed to catch that trade. Take out these stops, reclaim back into the range. You got your long trigger and you've got a decent long there. Once again, you're taking profits at sensible places, so you could be looking at this overall value area low. If it gets above that, then you're looking at this point of control. If it gets above that, EQ, value area high, and then obviously all this mess up here, all this noise. Obviously, if it does come down here, and this is something I think I need to make you guys aware of, because not everyone understands how we trade in the group, is if this does come down and you don't see any reaction, then there's no chance I'm long in there. No chance. I'd be much more comfortable letting this reclaim back into the range, change of market structure, and then longing. If this market structure doesn't happen, then I'll happily just sit in my shorts even longer, and there's no trade. So it's not a case of I'm not presetting any limit orders down here hoping to catch a swing failure pattern, because we don't know it's a swing failure pattern until after it's happened. And obviously down here could cause a cascade, because if you get down below these lows, the breakout traders that and your really horny bears are just going to start breakout trading this. And if they do get momentum, it could push price even lower. So it's just something we'll be aware of. Ideally we want to see some strength if this is to happen. So it's we've been saying about this for weeks now. Another pattern that we're looking at in the group at the moment is potentially this cipher. Now, to trade a harmonic, your technical trade is from point D. That's your technical trade. So X to A to B to C is non-trade. If you're aggressive and you see this, now this coincides with a swing failure pattern of the lows and a reclaim. So you could obviously trade this C leg up to the D. Obviously that's if there's a reaction there. If there's no reaction there and this carries on nuking down, this pattern is invalid. Which is fine, because this pattern's only truly valid until C's in and then D's in. And if you see this happen and then price meanders all the way back up to D, and you see a decent reaction there, and again that change in market structure, then you've got a potential short setup there. And that short setup you'll be playing down to the value area high, to the EQ. If it goes further, great. If it doesn't and then turns around and continues going up, you've got some counter trends there, counter trades even. Okay, so it's something that we're looking at now. If this cipher is to play out, then I'd be looking at this happening roughly, I'd say between the 4th and the 6th, maybe the 7th, between the 4th and the 7th of October for a low. Technically it should fall roughly around the 6th, and then if that does happen around that time, then you'd be looking at the D coming in roughly around the 12th of October. But again, this is just predictions for the time being. This isn't, you cannot trade from this alone. You need to trade from other technicals. Because as I said, the harmonic isn't valid until you get to D. That's when the harmonic's valid. And then you'd be looking at taking profits on your longs there and then potentially looking to open shorts here, if this is what happens. Okay? So that's that. So for the time being, we just level to level. You know, above us, point of control, and then this overall range highs. Below us, value area low, and then range low, and potentially a swing fairly pattern down here. Okay, so level to level. You know, we're not every single trade. We talked about this on Twitter the other day. You know, people are taking these trades, and I'm not going to mention any names of these moon boys, but they're taking trades hoping for the trade of the century. You know, wishful thinking. You know, we're not in an up-only environment right now. We're in a sideways and down environment. You know, we have been since 69k. It's been sideways and down, with a little bit of upside. But any upside has been a shorting opportunity or taking profits on your longs. So if you have been long in any of these dips, any of these, and just holding on to them, praying for new all-time highs, then you're an idiot. You're an absolute idiot. And this is what we mean by, you know, when you look at a bull market, slight rant here, and I'm not even going to apologise for it. In a bull market, you're just long. You're just long. It goes up. So the old saying, any dumb bull can make money in a bull market. And likely, dumb bulls make a hell of a lot of money in this because they're just long everything. But what happens then once it gets to the tops? Well, they give it all back. Because every single dip, they buy again, thinking that it's going to just continue up. So they buy this dip, then they get stopped out. Buy this, then they get stopped out. Buy this, get stopped out. Buy this. And then they just keep doing it because they just think it's an up-only market and it's easy mode. So by the time they've longed every single dip and holding on to it as a potential swing trade, then they've just given all this money back that they've just made. They've just given it all back. And they've just given it back to traders that understand how to trade a range. It's as simple as that. You know, bear markets are a range trader's paradise. If you are an up-only trader, wait until you see a confirmed high time frame uptrend. If you start seeing structure change, especially on something like a daily or a weekly, then yes, start getting involved. But just remember, it's not a case of if this does change from here, you know, if let's clear up some of this stuff. If this does change from here and starts creating a new structure up, great. But don't forget, we've still got all of this as resistance. You know, there's still a possibility that, you know, this comes up here and then comes back down. We don't know what's going to happen. We don't know. So, you know your trading conditions. Until we're back above this whole range, you know, we're not in blue sky crazy breakout territory where the FOMO just goes. Just like what happened when we finally broke out of 20k back in December 2020. It just went up. It just went up. Okay? But we're not into that mode yet. We're not in easy mode. We're in conservative trading, level to level. Okay? So, that's that. Point to note, as of next week, we're going to start putting out a second public YouTube video. We've been getting a lot of requests for altcoins because a lot of altcoins are 90% plus down from all-time highs. People are starting to wonder, you know, is this a good time for accumulation? Is this a good time to be getting into big swing positions? So what we're going to do starting from next week is throw out a second YouTube video, which is going to cover your altcoin requests. So down in the comments of this video, guys, I need you to tell me what altcoins you want covering. I'll select a handful, and depending on time, I'll throw up as many charts as I can in the extra YouTube video. Once again, if you guys want to learn with us, then come join our free Discord. You know, we've got so many charts, so much alpha getting pumped out by all the guys on a daily basis. You know, it's a great place to learn. If you guys want to take your trading to the next level, you know, you can check out our website, www.spitfiretraders.com, and check out our Copilot section. Yes, once again, it's a paid service. But for that, you get access to over 50 hours of educational videos. We're just about getting to the end of our Elliott Wave series, so if you want to learn Elliott Wave, this is the perfect time to get in on it. And obviously you get access to the private part of the Discord as well, which is down here, which is where I post most of my ideas, which included this short from here I was talking about in the group, how I was looking for this to break back down again, and lo and behold, obviously we got the breakdown. So yeah, I don't share setups, but I do share the ideas that I'm personally looking at. Obviously, if you don't follow us on Twitter, make sure you do. There's a lot of shit posting going on there. And aside from that, that'll do for this week, guys. So thanks for watching. If you've enjoyed the content, make sure you hit the like button and hit the subscribe to catch up on future videos. And don't forget to leave your comments in the comment section below about what altcoins you want to see next week. All right, guys, signing off as you were. Bye bye.